is MyStockScanner live on a Thursday. Every stock that we look at, we ask 3 questions. Is it a quality stock? Does it have an upside? And is the timing right? It's the 3-point playbook. Let's get into today's market and today's playbook. The Danish market were down almost 4% at one point yesterday, ended the day at 2.11. Today, 1.4% down, and it's all about Vestas, Maersk, Danske Bank, Jyske Bank, GN Store Nord. Hans-Henrik Nielsen, you are the man with the questions, or rather the answers. I'm the guy with the questions. Anything surprise you this morning or early hours of the trading?
Several things. There is, of course, a hectic mood of the earnings season, but also it surprises me how many private investors that think they can dig something out of an earnings report that the professionals didn't see.
So what you're telling me is that don't waste your time going over the earnings.
Don't.
Okay, well, we'll get definitely more questions about that in the show today. The 3-point playbook portfolio sets at 3.3% up in a volatile market. Last year, we did 34.48%, and the markets are moving fast because it's earnings season. So there's plenty to unpack. Novo Nordisk went down 6% in the US market yesterday, which were catching up to a tremendous fall on the Danish market of 17%. Is it a pause right now, or is there something more serious coming the way? Meanwhile, LILLY, one of the big competitors of Novo Nordisk, blew everybody out of the water yesterday with a surplus or a surge of 10% because of good earnings and good expectations. Back home in Denmark, Danish giants are under pressure. We take a look at Maersk, Vestas and Danske Bank are all in focus, but we'll also be talking GN Store Nord, Jyske Bank and Pandora. And silver took a plunge yesterday to the tune of 16%. Google doubles down on AI, and AMD got crushed yesterday. And what about Bitcoin? Also being trampled at the moment. Lots of things to get to, but today's number first, $713 million for every $1,000. How that math adds up, we'll tell you later. First, we look at the Danish giant Novo Nordisk compared to LILLY, because now both of them had earnings, Hans-Henrik, and there's a clear winner. Let's be honest.
That would be an understatement. That is LILLY. I just pulled them up on the screen here. All right. This is the red is LILLY, blue one is Novo, and as you can see yesterday, 10% down for one, 6% up for another. The reason is that it's 2 different stories. LILLY came out saying, well, we grew 43% last year and we expect 25 to 30% this year. Novo came out the other day, as we know, with a guidance saying we'll probably see a drop in revenue of 5 to 13%. 2% were expected. So they are just going each and every way. By the way, LILLY went out saying that weight loss pill that will be a competitor to Novo is actually moving stronger through the approval system than expected. So Novo will soon have a competitor there as well.
And talking about that competition, that's of course something that we'll keep an eye on when it happens. We were thinking it would happen just before summer, but if they're moving faster, it could come within the next couple of months. That would be another punch for LILLY towards Novo. And Novo, well, you pulled up the ground right here, and we just don't like when it's going downhill.
No, this is our value chart. For those of you that are new, we take the estimated earnings per share, we multiply it by some PE factors, and these are very low PE factors, but that is what we normally see. PE starts to move down when the earnings don't meet expectations. So we assume that price earnings level will move down because the investors are not as willing to take on risk with Novo. That would mean quite a significant downside. Actually, even our bull case over the next couple of years is a negative. So that is not too good. If we look at LILLY, we have a better value channel here in our value chart, and we do like that, because even though the market might drop a bit and we might be a bit wrong in our analysis, there is this upwards push. And I do like this a lot better. However, we rarely buy in the top of the value chart, so I would wait to see a bit of a drop before I would be interested in Eli Lilly. Both of them are actually quality companies.
And that's what we take a look at in our 3-point playbook, is that we look at the quality of a company before we even look at if it has a potential, and then we look at the timing at the end.
Yes.
And there's plenty to get through to today. And I know that we have questions in regard to Rheinmetall that we haven't even mentioned, and that's because the European defense stocks are going down today. We will get to Rheinmetall later on, but we're going to focus on the Danish market because a lot of the giants came out with numbers: Vestas, Maersk, and Danske Bank. And it's, let's just say, 3 very, very different stories. I don't know which one you want to start with, but I kind of have a feeling you'll bring up Maersk because they have an international deal.
Kind of we can just look quickly at the live chart of Maersk here. We have this, and it dropped somewhat today, not massively looking at the overall trend, but again, almost 7% for a major stock like this is quite significant. The thing is that we have actually not liked it for a while. Some of the things we don't like about it is that they have estimated a drop in earnings. And if people remember, we did EBIT and EBITDA in the Danish Wednesday word yesterday, if someone listening there. And some of this is because of depreciations and stuff, but we don't like this. We like that nice slope upwards, and they are not showing it. And that just means we are not expecting the stock to drop 167%. It's not like it's Trump's drop prices or something like that. However, it's just because when we don't have a positive earnings to multiply with, it kind of just goes to zero. So it's not a stock we would buy into. Why would we, when there are hundreds of good stocks that turn up on our screener saying buyers?
And the thing is that this is just a foregone conclusion for us, in that sense that the strategy we have, it doesn't matter what kind of stock it is. We use the same strategy for all stocks.
We do. We basically don't get. Of course, we know something about what the company does, and there can be some geopolitical factors or macro numbers that kind of skews us towards one sector rather than another. However, we don't care what the stock makes, if it's sailing shipment like Maersk, or if it's producing weapons like Saab and Rheinmetall. We don't care.
Let's take a look at Vestas, because Vestas came out. I won't say that they came out with a negative outlook or anything. But the investors are still dropping the stock today. Why is that?
Yeah, that's a good question, because they actually had some of the best revenue and best margins that we have seen from Vestas. So a drop here of 6.5% is a bit surprising. However, it's a very good example of what we say is, don't bother looking at the earnings numbers. You can read some headlines and you can read an article about what some clever analysts say about the numbers, but don't try and be clever and say, oh, Vestas did fantastic numbers, I will run out and buy, because you will end up really poor. What we have said for a while with Vestas is, first of all, it's a bit hard to put a PE number on, because here in the 2020 green tech frenzy under COVID, everyone should buy green tech stocks. It just went up and had an insane price earning. It had dropped down again, and right now it is at, what is that, 29 in price earnings. We think it's a bit too expensive, to be honest. We've said that for a while, even though it was in a good trend. When we look at it in the playbook, first of all, it's a good quality. Yeah, they are actually getting a handle on the business. Free cash flow is going up. So it's not a bad business. It's just that we think it is too expensive, and therefore we don't buy it. We want it down in the cheap zone, in the lower half of this value here.
Let's go to the last one of the big ones that we have chosen. The trio here is Danske Bank, and they are up today 2.5%. But they're really doing a thing that you really, really detest. Oh, that's a strong word, of course, but you really don't like when companies do stock buyback. And it's one of the things that is, I'm almost going to say, is a positive sign for companies if they do that. Why don't you like it?
No, it's just we do a lot of stock analysis and we find some good solid stocks. They have good fundamentals. We can see that the management, the CEO and all the management in the companies who really know how to run a business and they make a profit. And what I would like, because that makes a lot logic to me, is why not use that? Was it 23 billion krone or something they came out with in earnings? Why not use them to grow your business? But instead, I do get why, but they want to please shareholders. So they want to buy back some of their own stocks. That lifts their earnings per share, because if there's the same earnings and there are fewer shares, then the earnings per share goes up, and then they pay out dividends. I'm not a fan. It tells me a bit about the market that there are more and more stock buyback programs, and that is, it's getting quite hard for many companies to find a good place to grow. So they simply choose to buy their own stocks because, well, they know their own company, so why not invest in that when they can't find low risk opportunities out in the market?
In regards to the three big ones, it's not because they're the only one coming with earnings. There's plenty to pick from. GN Store Nord, of course, we were expecting a little bit of the same as demand from the other day, and well, they delivered on that one. I was not really positive. They were down 10% when we did the Danish show at 12 o'clock. It's improving a little bit. It was up and flirting with 7.5, still 8.5 right now. What is happening to these hearing aid and sound companies?
Well, they're running into some problems, and then they're running into higher expectations than that they can't fulfill. One of the things with earnings is, and I just answered a question before we started here, that was with AMD, that we'll get to later on, where someone said, well, why are they not going up when they actually grow their earnings and their revenue? And a good part of this is, well, if people expected more. If people expect a 20% growth in earnings or revenue, then they price that in. If the company comes out and say, well, we made record earnings, we grew our earnings with 10%, a lot of private investors are thinking, oh, that must be a buying opportunity. But actually, if the professionals had expected 20%, they're saying, then it's not as good a case as we thought, and then they're selling out. So often, and again, you can use hours and hours and hours digging into these numbers. What we do is we look at the headlines and quick explanations, then we look at how do the market react, because that tells us if the stock is doing better or worse than expected.
And a slight tick down for Jyske Bank, not the big expectations to them. They kind of kept their numbers and did what they were supposed to do. Another company that has been jumping all around in the last few days, Pandora. It seems like they're sort of doing the opposite of the silver price. Are they being tied in all in that sense that just because they use silver, so every time silver drops, then Pandora goes up?
Yeah, definitely. And we can see silver here is down 12% almost today. So that is why Pandora goes up. The thing is, it's a bit that we have said it for a while, that one of the reasons why it dropped, just one of the reasons, not all of it, but one of the reasons is the silver price. There's also the tariff war. They get a lot of stuff produced in Thailand and Vietnam and so on, and then export that to US. And that means they have 5,000-7,000 people sitting out in Asia that they can't just move into US to produce there. So they're being hit on several fronts. However, the market have kind of sniffed that up and say, oh, silver going down, Pandora going up, that must be something there. It's not as simple as that, because companies, they buy their commodities with futures contracts. So they lock in a price. So no one knows, even though the silver breaks down today, it's down 12.1% actually now as we speak. We don't know if they have locked in a high price for the next 12 months, well, I don't know anyway. And that means that day-to-day fluctuations with silver down, Pandora up, that's a bit of a gimmick.
That is a risk that we are for sure not taking. But let's just linger with silver just for a minute, because as you said, down 12%, it was down 16% overnight. Hans-Henrik, it seems like the volatility for silver has always been higher than gold, but lately it's been really something that you could look at.
Sure. And we've got several questions. When should we buy the silver? Should we buy when it hits 70? What about 60? And let me tell you, we don't know, and no one knows. There is a lot of manipulation going on right now. We talked about that in several videos and programs with a lot of the big banks that were short at around 75, 78, and then they were being killed. And the CME, the commodity exchange, they changed the rules, so people were forced out of their long positions, and no one really knows how far they are in that process. Could it turn around here and go to 120? It might. Could it continue down to 40? It might. Be careful not to think that you have figured out where it will turn, because you don't.
Can I ask just one question in regards to that?
Sure.
How come that silver is so much more volatile than gold? I thought that they were basically not mirroring each other, but the one was just cheaper than the other.
They are very, very different beasts, these two. Gold is an inflation hedge. It has been the darling of the central banks now that more and more central banks don't want to hold dollars and US bonds and so on. It's used a bit in electronics, but silver is the big thing here, in batteries, in EVs, in all chips, in solar panels, so there is a huge industrial demand for this. That's one of the things that drew the price up, that they're actually produced 150, 200 million ounce less silver every year that is consumed. So basically the storage of silver is dropping, and will be dropping the next 5 to 7 years. So they are two very, very different on the supply and demand side.
And the use of silver, as you said, also makes it a hard one to put into sort of a hedge against, I'm going to say, the dollar fluctuation as well. Let's turn our attention to tech, because it's Thursday. Normally, Liam Flavel is the one that takes care of the tech side of business, but he is on vacation, so it's up to you and me and make sense of it. And there was a big number that came out yesterday, or a big earning that came out yesterday, that everybody was very occupied with. And I think that a lot of people, Hans-Henrik, kind of expected that Alphabet either were going to fly up or go straight down. And they stayed, I won't say they didn't drop, because they dropped in the market 2% and in the aftermarket 2%. But we thought it was going to be worse. And they came out and said, we're going to burn money on AI. So how come it didn't drop worse?
Well, it's hard to say exactly, but I have a feeling that it's because a lot of people, like we do, think that Google will be the winner in this entire race. But it is true. They came out in 2023. They spent $32 billion in what is called CapEx, meaning buying equipment, buying new warehouses and so on. And of course, in Google's case, it's data centers. They're buying chips. So that was $32 billion. That sounds like a lot, but when you hear that in 2025, last year, they spent $93 billion. And then people expected that would probably go up. So it will go up maybe to $120 billion. But they came out saying, nah, we're going to burn $185 billion on it. And that is just an insane amount. If we just take a quick look at the numbers, I will move away from the normal 3-point playbook and into our summary page here. If we scroll down in the normal report here, we can get to the CapEx. That is the capital expenditures. That is what they spend on, for instance, data centers. And 185 billion, this is per share, of course, but if we go down here, we can see they simply don't have that sort of money. Even their working capital, we have the cash and we have the working capital, that is not anywhere near 185 billion. And they want to store some free cash flow for, well, a rainy day. So they are going out and borrowing, selling corporate bonds for a huge amount of these 185 billion. And that is a problem, because these data centers, these chips wear out in 5 to 7 years. And if they have not found a way to profit from these investments within the next 5 to 7 years, then they need to reinvest a new 185 billion without having made the first 185 billion back. So that is why the entire tech sector right now is a bit nervous, because they start to realize not many companies have a clear plan. They just try to be first and biggest, and if they don't get there, then they're going to lose bigly.
And the thing is that we got to remember, and you always underline that is Google is a lot of more other things than just data centers. They are part of
Oh yes,
robo-taxis.
I love Google. Yeah, I love it.
It's definitely not because that we don't believe in them, don't think that they have potential, because they definitely do. Let's take a look at another.
If I may just add, actually,
Yeah,
they came out with a number that also made the investors a bit more comfortable with. That was the search engine data. They actually had an increase of, I think it was 17% there. So a year ago, people were afraid they would lose the entire search engine space to, for instance, ChatGPT or something like that. But they are actually growing there. Yeah, go on.
Yes, I just want to, because we need to get to Rheinmetall as well, because we had questions of that on our FOMO at MyStockScanner.com. And I know that we get a lot of questions and we don't get to all of them. I'm sorry about that. We will do a webinar especially just for your questions. So keep an eye out for that on MyStockScanner.com. We will advertise it. But we need to get to AMD, because AMD has been a darling. They even been compared to NVIDIA. And I guess the market just said not so fast yesterday, because a drop of 17%. It was their worst day since 2017. And Lisa Su, the CEO of AMD, was out addressing the guidance concerns. Hans-Henrik, take us to the numbers.
Yeah, the thing with, well, first of all, if we look at the chart, the AMD was just a brutal drop yesterday, no doubt about that. It was only back to the price in October, but it has been a bit stalling here. The thing with AMD is, and that is where we can also be a bit tricked here or cheated, because we are looking at what are the expectations here, and they were really good. The thing is, with the 2025 numbers, that was good, and then people expected even more of that here in 2026. Then AMD came out saying, oh, by the way, that really good revenue number in 2025 was because we got a one-time order to China for that, what is it called, MI308 chip set, and we don't expect to get an order like that again. And all of a sudden, this expectations here, that it was just cut down, or not, but the actual numbers were cut down if you deduct the one-time numbers, and that means the expectations for 26 will also be a lot lower. Also, there are some potential delays with the 400 series of chips that spooked the market even more. So if we look at the valuations here, we are in the high end. If we look at right now, it's priced at a PE of around 100, meaning we're paying $100 for each $1 profit. However, if all of a sudden markets get spooked, this will drop. And if we look at this, and we look, for instance, at the bear case, let's say this drops to 25, the bear case, because people say, ooh, there's a lot of risk in here, then we are looking at a lot worse numbers for AMD.
We definitely keep an eye out for them, because they are part of the AI industry and delivering the chips. And when you have China as a customer, well, one day you have an order, the next day you might not. Depends on how Trump sees it, depends on how Xi is as well. And Henrik, talking about being spooked, what happened to the European defense stock today? Because I took a quick look before the show. Everything was down. Rheinmetall, Saab, Indra, Babcock, everything took a tumble today.
Sure. They basically went out saying what we have been saying since August. And that is, if we just find them here in a value chart, there's no doubt Rheinmetall, it's a really good company quality-wise. And it's a bit like with Novo Nordisk, when people say, well, we buy Novo Nordisk because there'll always be obese people. And I've heard the same argument with Rheinmetall and Saab. We'll buy them because there'll always be a need for weapons. And yes, the problem is, or what we have been out saying is, these are big industrial production company, meaning they cannot just double or triple or 10x their production. That is a long grind to get to that. And that means when we were in July, August here last year, we sold our defense stocks and put them into something that actually grew, because we said, they are expensively priced, they start to go down. Then they went up again, and we said, well, they can easily do that. We don't know where the top is, but we're just saying it's not interesting for us anymore. So it has cycled up and down, and right now it's a bit more down. We think, and that is what Rheinmetall were now saying, the expectations for 2026 will probably grow somewhat slower than expected. Then it really doesn't matter how many billions EU is ready to put in weapons if they cannot keep up with the demand.
No, simply if you can't deliver, then you might have an outlook to get the money, but you need to deliver to get to the money, so to say.
Yeah.
Let's talk a final thing here on the show, because that was a number of the day, and it is really interesting because it's $713 million for every 1,000. Hans-Henrik, I'm going to bring you in on this one, because how does that make sense?
Yeah, I'm just looking at the price we are going to talk about here. Maybe we talked it down actually from the Danish show, because
I doubt it.
Bitcoin is right now around 69,000. When we talked about this an hour ago in the Danish show, it was 70,200. What you're saying here is that this 713,502. That is the number of Bitcoins that the company strategy, that used to be MicroStrategy, they are sitting on. I have been hating on this company for a while. I've got some really annoyed comments from people around in Denmark saying, you don't understand the business model. And yes, I do. What they live off is that they buy Bitcoins, then the Bitcoins go up in price, then they borrow money against these Bitcoins to buy more Bitcoins, so it goes up again. That is a Ponzi scheme if I ever saw one. And right now they're sitting on 713,502 Bitcoins, meaning, as you said, for every $1,000 Bitcoin drops, they lose $713 million. And as of right now, today, they are down roughly $5 billion, which is a bit. And they are actually down around $1 billion since we just had our show a short while ago. At some point, they'll have to pay some taxes. At some point, some of the people that lend them the money might want their money back. And that is a bit tricky if the stock or if Bitcoin has dropped. We have said for a while that actually from a top, it's not unusual for Bitcoin to drop 75%. If that happens again, we will see 30,000 in Bitcoin. And that is not us being apocalyptic or world is ending. This is just the nature of Bitcoin. So if that happens, Michael Saylor's strategy will be in a world of pain.
And I can't even calculate that number that they're going to be down, but it's a lot of money. Let's just say it's a lot of money.
It's more than you and I earn.
Yeah, absolutely, for sure. We're coming to the end of the show, and it's not because the earnings season's over and this week is still jam-packed. There's a lot of numbers coming. We're going to see some numbers in the US today from other big companies. Amazon is up. We're going to hear from Kongsberg and Toyota on Friday. A couple of Danish companies also owe numbers before the week is over. And then, Hans-Henrik, I know that you're taking the job numbers in the US very serious. And there's still a little uncertainty what numbers we get, because at one point they said you're not going to get numbers because of the 4-day shutdown. But that makes no sense at all, does it?
Now, we did get the JOLTS numbers that we were supposed to get Tuesday. I think we got them yesterday or today or whatever. It's they are out there, and I think we will get the NFP numbers. But we are not looking that much at the number itself, but more how the earlier numbers is revised down. That is actually what tells the true story. So that will be really interesting. We'll comment on it for our members in MyStockScanner.
And remember, we're found on all social platforms, from LinkedIn to Instagram, but also, of course, on Facebook, where we have 3 different groups. We will give excerpts from our articles that can be found at MyStockScanner.com. Do go in, take a free membership for a month, check us out, see how we're doing, see how we made 34.48% on our portfolio last year. We're back on air in English on Tuesday at 1 o'clock. In Danish, tomorrow, we're going to round up the week as well as we can, because of course, there's still a couple of numbers coming out in the afternoon that we don't have. Hans-Henrik will get to those on the weekend wrap on Sunday. Don't worry, we have you covered. MyStockScanner live is always smarter picks, more confidence, less stress. That's the 3-point playbook: quality, upside, and timing. That's what we look for in every stock. Hans-Henrik, always a pleasure to have you on the show here, and we will see each other tomorrow at noon when we do this in Danish. Have a good one. Happy investing.